Hi, I'm Jimmy. In this video, I'm going to walk through 5 of my favorite growth ETFs. Now, this video is coming off 2 videos that I did on different good dividend ETFs, and I got a couple comments about my thoughts on growth and value ETFs. So I thought it would make sense to look closer at both value and growth ETFs. This video is my 5 favorite growth ETFs. My next video, I'm going to be looking at my 5 favorite value ETFs. Okay, so let's jump into our first growth ETF. First up, we have the Vanguard Growth ETF, ticker symbol VUG. They have a dividend yield of about 1%. They have about $51 billion in the fund, and they charge just 4 basis points as an expense ratio. And when we look at their top holdings, well, we see many of the large companies that we would expect to see in this type of portfolio. Companies like Microsoft, Apple, Amazon, Facebook. And the way that they pick these companies, or the way that they pick the companies that end up in this particular ETF, is that they focus on the long-term growth of earnings per share. Then they consider the short-term growth of earnings per share. And then they also look at the potential growth of revenue. And finally, they try to weigh in things like return on assets. And when we look at their sector breakdown, well, we can get a better understanding of how varied this particular growth ETF really is. Overall, they have about 280 companies within the ETF. And as we can see, about 32% of this particular ETF is focused in technology stocks, which makes a lot of sense since a lot of growth is coming out of the technology sector. Besides that, it's fairly well spread around. Now let's imagine that we think that technology should be a bigger focus of our growth ETF, since it's been so strong and it's likely that technology is going to do well in the next couple of years. Well, if that's true, we may like our next growth ETF. Next up, we have the Vanguard Information Technology ETF. Ticker symbol VGT. They have a dividend yield of about 1.1%, $30 billion in assets in the fund, and as Vanguard does best, they have a good fee at about 10 basis points. And as I alluded to before, when we look at their sector breakdown, well, it's dominated by technology stocks, which could be a bit more in line with where we think growth might be in the next couple of years. I think technology is likely to continue to do well. So for me, I think that this makes sense as a dominant position. And then when we switch over to their top holdings, well, this once again might be more in line with what we're picturing. Clearly, this growth ETF is led by companies like Apple and Microsoft, but they have some other great companies in there. Companies like Visa and MasterCard I'm a big fan of. Intel, Cisco, these are solid companies that are likely to see some growth in the next few years. So this is the main reason I included this in our top 5 growth ETFs video, because I think it would make sense. If we're going to focus somewhere, I think technology is a smart place to focus. Another option is to shift away from these large companies altogether. So to take it down in size a bit, next up I have the iShares Russell Midcap Growth ETF, ticker symbol IWP. They have a dividend yield of slightly more than 0.5%, and they have about $12 billion in assets. They also have an expense ratio of about 24 basis points. Now clearly, this growth ETF focuses on mid-cap growth stocks. And when we look at some of their top holdings, well, we can see that they invest in companies like AMD, Dollar General, and Lululemon. And we might be able to tell by the size of their holdings that they hold a decent amount of companies within this ETF. In fact, they have about 400 mid-cap growth stocks. And it's a fairly diversified ETF, as those 400 or so companies are spread out amongst a bunch of different sectors. And if we're curious, I know AMD is like a $60 billion company. That's why when I first saw that, I was like, really, mid-cap? But I guess it depends on how you define mid-cap. But I found that the companies in this ETF range from about $2 billion to as high as $81 billion, although most of them fall in the $5 to $25 billion range. AMD is one of the outliers. Okay, now what if we're after even smaller companies that have more growth potential? Then perhaps the Vanguard Small Cap ETF is what we're looking for. Ticker symbol VBK. They have a dividend yield of about 0.5%. They have about $26 billion in assets, and they have an expense ratio of about 7 basis points. When we look at their top holdings, well, once again, we may notice some of their top companies don't account for even 1% of this portfolio. And that's because this particular growth ETF has about 574 companies in it. And when we switch over to their sector breakdown, well, we can see once again, it's fairly diversified amongst a whole bunch of different sectors, which is likely a good thing to have for investors from a risk control standpoint. Okay, now let's shift over to a slightly different version of a growth ETF. This is the iShares Core Dividend Growth ETF, ticker symbol DGRO. They have a dividend yield of about 2.3%. They have about $10 billion in the fund, and they charge a fee of about 8 basis points. Once again, when we switch over to their sector breakdown, well, we can see that they're probably the most diversified growth ETF that we've looked at so far, which once again has a place in most portfolios. They have almost 500 companies in this particular ETF. And they're truly they truly have all sizes of companies, ranging in companies as low as $1.5 billion as far as market cap, to as large as companies like Microsoft and Apple, which are worth over $1 trillion each. Now, the reason I'm including a dividend growth ETF on a list of top growth ETFs is it really revolves around how this particular ETF goes about selecting the companies within it. For example, they must have consistent dividend growth over the past 5 years. They also need additional room for growth in both earnings per share and dividends looking out the next few years. This allows for this ETF to exclude companies that pay out a large portion of their profits as dividends. And ideally, the companies within this ETF can use those retained earnings to both grow the business itself and pay at least a small piece of their profits as dividends, which as an investor, I'm a big fan of. I also like the upside that the reinvesting of the retained earnings can do for the company. So I think this is sort of the best of both worlds. Now, I know that in each of these 5 growth ETFs that I mentioned, I talked about their fees. And I probably should have been a bit more clear that I was specifically referring to their expense ratio. And although this is the most popular of all the ETF fees, it's certainly not the only one out there. There are instances of other ETF fees that we as investors should be aware of. And if you're curious, I actually did a video on the broader range of ETF fees out there. And that could be a good next video for you to watch if you're interested. There's a link right here. There's a link in the description below. And I really want to thank you for sticking with me all the way into the video. I really appreciate it. Thanks, and I'll see you in the next video.